Japan still trying to recover from its massive quake, and unrest continues across the Middle East. What does that mean for emerging markets and emerging markets investors? Well, we're joined over the phone from Cape Town by Mark Mobius. He's the chairman of the Templeton Emerging Markets Group, who oversees more than $50 billion in assets. Good morning, Mark.
Good morning.
Okay, so, I'm curious to know, we know that you're an emerging markets bull, but having seen the events over the weekend, having seen what's happened in the Middle East, are you, in fact, even more bullish on emerging markets throughout this unrest?
Well, my bullishness has not really changed in any direction. The impact of what's happening in Japan is not having a significant impact on the rest of markets around the world, as you know. And particularly in emerging markets where the demand for commodities continues to rise, the trend for all these commodities is up. There may be a little of a hiccup in things like iron ore temporarily, but then as the infrastructure spending in Japan picks up, you're going to get a lot more demand coming in. So as it stands now, emerging markets are not being impacted very much.
Mark, it's Sheila Dharmarajan here. Speaking of commodities, food prices have had such a rapid rise over the past year. How is that affecting your view of emerging markets where food is a much bigger part of their budget than it is in developed countries?
That's a big worry. Inflation generally is a worry, but food inflation is particularly a big worry, particularly in the low-income countries where a combination of unemployment and higher food prices is a recipe for political upheaval. So we are very concerned about that. And, of course, we've already seen some of this political upheaval in the Middle East, and that could spread around the world, not only in emerging markets, but also in developed markets. So that's something we have to watch very carefully.
Mark, this is John Erlichman. Are there any sectors, despite your bullishness, that you are a little concerned about after the earthquake, like the auto sector, which we've been speaking so much about recently?
Yeah, one of us can take a look.
Well, I think if you look at two areas, commodities and consumers, these, of course, are two very important sectors for us, simply because generally the emerging markets per capita income is moving up. But you do have a segment of the population in these countries that are in the very low-income arena, and higher food prices, of course, with them. But generally speaking, we continue to invest in consumer-oriented companies, such as consumer banks. And, of course, in the commodity area, we go for the diversified mining companies and oil companies in particular.
Mark, earlier, we were talking about emerging markets, of course. Let me just get your take on the Middle East and in Egypt in particular. I'm looking right now at a headline on my terminal here. The Egypt Stock Exchange is going to be opening on March 23rd. This is according to a government spokesperson. I know that you've got investments in Egypt, so this is yet again, I suppose, more of that Egypt story that you've been adding into your I guess, holdings in Egypt. That this is essentially a good buy for you.
Yes, I mean, we have a frontier markets fund, and so Egypt is very important for us. And we've always felt that despite all the upheavals and all the problems, Egypt would pull through and be a very important player for us. And we believe we're going to see a lot of good things happening in Egypt as we go forward. So we're pretty happy with that.
Can you take that Egypt model and apply it elsewhere in the Middle East, or is Egypt unique there?
It's unique because it's the largest country in terms of population in the region. And if you look at some of the other countries, they're rather small. But we have money in Qatar. We have money in the United Arab Emirates. We have money in Saudi Arabia as well. And, of course, all these countries are going to be going through a lot of reform and change, which we think is very good for the markets. We think it's a very progressive development that we're seeing.
Mark, what are you buying? Let's just take Egypt first. What are you buying in particular there?
Well, we're particularly interested in telecoms in the region, so we're looking at the telecoms companies. That's one area. We also like construction, because some of these companies have a lot of holdings outside of Egypt. They're not necessarily Egyptian construction companies. They're really global construction companies. So that's one area that we are looking at. The other, of course, is consumer. Anything having to do with the consumer is of interest to us. So we want to get access to the Egyptian consumer because despite all the problems, per capita income is moving up, and we want to get exposure.
What about oil assets?
Oil assets are difficult to get in these countries, many of these countries, for example, in Saudi Arabia or even in Egypt, because these are government-controlled companies. So we get our exposure in oil through other parts of the world. For example, Kazakhstan. One of our biggest holdings is Kazmunay Gas, which is the largest oil and gas company in Kazakhstan.
So you play Middle East oil through Kazakhstan then?
Correct. Okay. And also we'll get it through the downstream. For example, SABIC, which is the Saudi Arabia Basic Industries company, has chemical production based on, of course, the oil, cheap oil and gas.
Mark, I know that you're in contact all the time with some of the companies that you're invested in. In the Middle East, have you been in contact with some of those companies, like the consumer companies or telecoms? And what are they telling you about how they're operating?
Well, you can imagine the telecoms companies are doing big business now because of the tremendous amount of traffic they're having. So that's not a problem. The operations of these companies have not really been disrupted because a lot of this activity has been on the street with not a real big upset of the basic infrastructure. So, life goes on. People have to make phone calls and they have to buy their products in the market.
Right, they do. Mark, also on Japan, I want to just something that reminded me about Japan. I know you don't invest in Japan because it's not an emerging market, but has it fallen so much to the point that you might want to actually try to play the development or the rebuilding of Japan in some other way?
Oh, yeah, definitely. I mean, the way the Japanese market has fallen, if it was an emerging market, I'd be in there buying because it's a great opportunity. I think they are definitely going to recover. They will come back very strong. As far as their impact on emerging markets, it's not significant. Even though Japan represents about 6% of the world GDP, what has been harmed is a very small part of that. So we're talking about decimal points of percent impact. But going forward, the demand for steel, for cement, for all kinds of raw materials will go up because of the infrastructure spending they'll have to do in order to repair what has been damaged.
So you would buy steel companies, let's say, where?
Well, iron ore, for example, is one of our biggest holdings. In terms of steel companies, we are a little more cautious because iron ore prices continue to go up. So we'd rather be, in the iron ore rather than the steel itself.
Okay. And Mark, just before I leave you, I know Brazil is certainly one of your bigger holdings. We just had President Obama leave Brazil after talking about investments there. Are you adding on to any equity positions there?
Yes, as money comes into our funds, we have to add into Brazil. Brazil is an incredible market. And, of course, our Latin America fund has by far the biggest holdings in Brazil. So we're, again, it's raw materials. But the interesting thing about Brazil is the consumer market is very big. So we have, for example, cosmetics companies and that sort of thing, which is really interesting in Brazil.
Interesting. Okay, a play there on the consumer. Mark, thank you. Appreciate you joining us again. That was Mark Mobius, the chairman of the Templeton Emerging Markets Group, oversees $50 billion in assets.